Hey everybody, welcome. This is my YouTube series on preparing Canadian personal T1 tax returns. My name is Ian DeNovo and I'm a professional accountant in Toronto and the founder and instructor at CanadianTaxAcademy.com, where I offer some practical real-world training courses in the areas of personal income tax, corporate income tax, and a number of other tax areas. If you're interested in taking some personal tax courses, you can scroll over to the bottom in the description section here at YouTube, and I do offer some promotions, or check out the pop-up bubbles that come on every now and then, and you can take courses at CanadianTaxAcademy.com for a very reasonable price that you'll find is very competitive compared to other options out there in the world of Canadian tax. So, without further ado, let's get on to the training series here. These series of 4 tutorials will teach you how to prepare a basic Canadian T1 tax return. So let's get going. Alright everyone, welcome to the next tutorial here in the playlist or the series on preparing a Canadian income tax return. So this tutorial is all about deductions from income. So the first thing to know about deductions is that they're different from tax credits. Deductions are an actual deduction from the income to come up with the taxable income, whereas tax credits are applied to your federal tax and your provincial tax payables. So we're going to look at tax credits in the next tutorial. On this one, we're going to focus on the deductions from income. And again, in the Canadian income tax course over at CanadianTaxAcademy.com, we go into quite a bit of detail so that you know the logistics and exactly how tax credits are treated differently than deductions. But for the most part here, to prepare a Canadian tax return, all you have to do is just enter the proper information into the tax software and into the T1 return. So if you remember John from our previous tutorial here, we've entered his income from slips. So he had a T4 slip from his employer, and he also had some investment income slips. He had T3s, T5s from his investments over at Tangerine and Investors Group. Now the net income section here, this is where we determine the taxable income, because this is going to be where the deductions are reported. So again here, the software is going to take all of the relevant information from the existing slips and enter it into the appropriate line items here on the on page 4 of the tax return. So as you can see, there's a pension adjustment amount reported here and a registered pension plan deduction reported. Those were taken right from the T4 slip. So if I go to the T4 slip, 4785 and 3890, you'll see those amounts actually on the T4 itself, 3890, 4785. So the software will do a great job in making sure that John, in this case, gets the deduction for his RPP contributions, which is basically a pension plan that he has at work. And then this 4785 goes into the calculation of his RRSP deduction limit, which is beyond the scope of this tutorial here on YouTube. So if we go back to the T1, you can see here that those have already been populated for us. And you can see here that John also had some union dues on his T4. So if we go back to his T4, you can see here that in box number 44, 418, that was entered into the box here by the tax software for us. Now let's look at some common deductions. You're not going to have all of these deductions, obviously. The most common ones are, as we mentioned, anything related to pensions. So people who have pensions at work will get an RPP deduction. You can see here, line 208 is a very, very common deduction. That's for RRSPs, for individuals who contribute to an RRSP. There's also childcare expenses here on line 214. So if you meet the criteria to be able to deduct childcare expenses, there's a form T778, which breaks down what you can claim, what you can't claim. Those can be pretty complicated as well. But for the most part, what we're going to be looking at here is just John here, who has some additional professional dues that he wants to deduct and made some additional contributions to an RRSP outside of his work plan. So for the most part, it's very straightforward, and that's probably going to cover the situation for a lot of taxpayers, including yourself. So now let's assume that John just made a let's just say he made a $4,000 RRSP contribution. So if we go over to the deduction side of the slips here in the program, go to RRSP deduction, it'll bring us to a worksheet here. So one of the first things we're going to look at is going to make sure that John has the RRSP room to make the contribution. So let's just say this is the first time he's made a contribution and he still has a huge amount of RRSP space. He's got $34,250 that he can contribute. Now what he did was he actually made an RRSP contribution to his Investors Group financial advisor for $4,000. So all he would do is enter the information here into the worksheet, and he made that in the first part of the year here. So we're going to say he made that from January to February 2016. We won't go into why that's important. That's covered in the tax course. But once again, quite simply, that is all you really have to do for the deductions on the RRSP. So if we go back to the T1 here, you'll notice that John now has that $4,000 as a deduction on his T1 tax return, along with the $3,890 he made to his registered pension plan at work. Now, let's just assume he had some professional dues of $339. Well, if we double click on this box here, it takes us to the worksheet. Let's assume that he made these dues, professional dues, $339. Now, because this didn't come from the T4 slip, he's got to actually manually go through there and enter it from either his financial records or from the slip that his profession may have given him. And you'll see here that that $757 in total is transcribed onto the T1 tax return itself. So I won't get into too much more detail here on the deductions. The deductions that are most common are obviously the RRSPs and the pensions, which we've spoken about. We have the annual union, professional, and like dues. These are very common. Union dues are usually reported on T4 slips, but sometimes they're not. Sometimes they're made through a separate contribution at work, and you'll get a slip from the union specifying what you've paid. Now, one thing you'll also notice here is there's things like moving expenses. You have to be very careful. Just because you moved, you can't claim moving expenses. There's very specific rules as to who can claim those expenses. And there's things like business investment losses. Again, you're not going to see these. These are pretty rare, actually. They do come up in practice quite a bit, but for the most part, for just a general T1 return, which is what we're focusing on here, you don't really have to worry about that. Now, there's also deductions here, as you see, for employment expenses. Once again, these don't apply to everybody, so just because you can go here and see other employment expenses, that you have all of these categories here: vehicle expenses, office, parking, lodging, home office. You can't just claim those even though there's a form there. You have to have basically permission from the employer, and that the CRA will only allow those to people who have what's called a Form T2200. So again, when you're looking at deductions, don't assume that everything on here is deductible in your case or your client's case. You obviously have to know the rules, and then you'll be able to enter the information in accurately for the deductions.